90. Spectrum wants to hear your views. You can SMS at any time during the show. Type Spectrum, leave a space, type in your contribution and name, then send it to 7197. Your views, our interviews on Spectrum, Radio 1 FM 90.
Hello, a very warm welcome. This is Spectrum Radio and I'm your host Edmond Kizito. On Spectrum tonight, what are the challenges and opportunities in the Ugandan insurance industry and how are the players handling them? The insurance industry in Uganda has been registering positive growth since the 1990s, and to date there are 21 licensed insurance companies, albeit with a very low penetration rate. One of the key challenges to the sector is the negative perception that insurance companies are cheats and opportunists who use their well-designed policies to make billions of money every year. Most insurance businesses in Uganda are foreign-owned, and this has led to complaints that all the profits they make are being siphoned out of the country instead of being directly invested in the country. Uganda also does not have a reinsurance company, and it is reported that out of the 200 billion Uganda shillings collected by the sector annually, about 100 billion shillings, or half of all the money, goes out of the economy in reinsurance fees. Government has also been blamed for not supporting the industry, considering the fact that it does not insure most of its properties. There is also a challenge of the industry lacking the capacity to handle major risks, for instance, those associated with the new oil and gas sector or disasters such as the recent helicopter crash. Many Ugandans do not appreciate the benefits of having an insurance policy, despite the many risks that they face today, including accidents, fires, and many others, whose policies are available in the insurance sector. In many countries, insurance companies provide a variety of services, but most importantly, they have ventured into the pension sector, breaking the monopoly of government. The Ugandan insurance sector is now under the rebranded Insurance Regulatory Authority of Uganda, which has replaced the Uganda Insurance Commission. So right on Spectrum, we venture to establish exactly how the authority is helping shape this industry amid current challenges. We also ask the question, is the insurance sector safe enough to be trusted by Ugandans, considering this general negative perception? Our guests tonight, Miss Rachel Kabala, Manager Legal and Compliance at the Insurance Regulatory Authority of Uganda. You're most welcome, Rachel.
Thank you.
We're also joined by Mr. Paul Muhamya from the Uganda Insurers Association. You're most welcome, Mr. Muhamya.
Thank you.
We're also joined by Mr. Ivan Kilameri, Actuarial Officer at the Insurance Regulatory Authority of Uganda. You're most welcome, Ivan.
Thank you, Edmond, and good evening, listeners.
Rachel, could you outline for us the state of the insurance industry in Uganda today?
First of all, thank you, Edmond. First of all, let me talk about the authority's achievements. Then, from there, I can talk about the state of the industry. The Insurance Regulatory Authority was established in 1997, and recently in 2011 it was rebranded to become the Insurance Regulatory Authority, and it has over the past 15 years, among others, built a financially strong insurance industry, continued to attract foreign and local investors, enhanced consumer confidence, and encouraged the consolidation of insurance players. It has also promoted professionalism. So it has, over the years from those years to 1997, licensed the following operators: insurers, insurance brokers, loss assessors and adjusters, and agents. For example, maybe Ivan can fill in the details of the figures of
we have about 23 licensed insurance companies. We also have 30 insurance brokers. We have 18 licensed insurance agents and 18 loss assessors and over 600 licensed insurance agents. In the marketplace, the insurance marketplace, we have a number of bodies. We have the Uganda Insurers Association, which Paul is representing. We have the Uganda Association of Insurance Brokers, an umbrella body that brings together all the insurance brokers in the country. We have the Insurance Institute of Uganda. That one was created for purposes of training. We have the Uganda Association of the Valuers and Loss Assessors, and we also have the Insurance Regulatory Authority, a government body that was set up to regulate the insurance industry.
And
Yes.
maybe one important factor Ivan has not mentioned is that the authority set up a complaints bureau in 1998 to handle complaints against insurance players. So the public is urged to always lodge complaints with the bureau for prompt settlement of the complaints and to avoid the lengthy and costly court cases.
And
But
how-
we'll talk more about
All right. And how is the industry regulated?
the industry is regulated by the Insurance Regulatory Authority.
That is the apex body.
Yes.
All right. Maybe Paul, you can talk to us about this sector. Does it look like it's growing?
Well, the growth has been seen over the years. If you look back to the late 80s, when the new government came in, the current government came in, insurance was practically in tatters. Then I remember the tied-up capital just to have an insurance company was about 200 million. But then through the Uganda Insurers Regulatory Authority, then a lot of work has been done in trying to build capacity within the various insurance companies. And we've seen insurance companies grow in strength, grow in technical creativity in bringing different kinds of products to the country. I must give a lot of credit to the regulatory authority, because when you compare today to then, there's a lot of ground that has been passed. We still have a number of challenges, the usual challenges to do with perception towards the insurance companies, but then hopefully within this show we can break it down and answer questions as they come.
In this show, you can break down the negative perception that has built over a period of only 20 years. Let's look at the optimal capacity of do you think the industry is operating at its optimal capacity? Do you have enough insurance companies and the people who are supposed to be insured?
Going by the penetration levels currently, which are quite low, it shows that there's an opportunity out there. There's an opportunity to have as many insurance companies as possible. It shows that there are a number of untapped markets. Therefore, at the moment, we can't say it's operating at an optimal level. But going forward, we encourage a number of insurance companies and other players to join the sector.
And what are the bottlenecks that curtail your growth?
Basically, it's perception. When you're reading the introduction, as you mentioned, the perception of the perception of the Ugandans about insurance is that mostly think that insurance companies or insurers are cheats. Insurers do not pay claims. They don't settle claims. Insurance is not a priority, even for middle-income earners. And insurance is for the rich. Yet the rich have not yet got the perception. I can even wonder whether, Edmond, you are insured. You might find that you are also not insured, maybe because of the perception. I don't know. Maybe my fellow colleagues.
Maybe you can start from the back. What is insurance?
Insurance is a risk transfer mechanism.
Risk transfer mechanism. Something will go wrong. When it happens, somebody else should pay for it. Go on.
I just wanted to add on to what my colleague Rachel mentioned. Some of the bottlenecks, some of the challenges we are facing is that, one, there is a law enforcement of the workers' compensation.
I would like us to first understand insurance a little bit.
Okay.
You identified as a risk transfer mechanism. That is still Greek for the average person. Let's get to understand what is insurance. Paul, you can help us, perhaps.
Yeah, maybe to break it down a bit further is, out of so many people, you'll always have a few who suffer losses. So insurance comes in whereby the premiums of the many will pay for the losses of the few, right? So in that way, generally insurance will look out for those who will suffer losses, whether it's property losses, injury losses that need compensation, and those are the various products that we roll out usually in the market.
When you talk about premium, let's try to understand it very well. Let's assume we live in an estate of 10 houses. and we think, all of us think, our houses will one day catch fire, and then we put our money in an insurance company, and only one house catches fire. The other house that didn't catch fire, the money that was paid the insurance company will be used to compensate that. Broadly speaking, does that represent the picture?
Yes, it does. Maybe to answer your question in another way, why should one insure? Maybe to make the issue clearer.
Right.
So protecting your life and property one's life and property should be an important part of their financial plan. So insurance protects you from the financial problems resulting from the damage or loss either to yourself or to your property. It is therefore important that one insures their life and property against any unanticipated accidents, damage or loss.
Let's try to understand the kind of services that you offer. What kind of insurance policies do you have in the industry?
We have a number of insurance policies. We have insurance policies that cover for fire. We have motor insurance policies. We have burglary. We have workers' compensation. We have public liability covers. We have marine covers. We have so many others that
different ones. All right.
Paul can add on.
Okay, maybe. Okay, I think we have a synopsis. We have an overview of this. Let's look at burglary, for instance, as a case study. What kind of person should insure themselves against burglary, and what exactly happens in practice?
Well, if you're the kind of person, company, firm that has stock for the shop,
Chikubo trader, whatever, stockist,
then you need
wholesaler,
to cover your assets for burglary. Because what you're asking is, God forbid, if your stock was stolen overnight or during the day, then how would you get compensated to get back into business?
So what happens? You are in Chikubo, your shop might be broken into. You're insured against burglary. They actually break into it. You didn't pray hard enough. What happens?
There's a process to follow. Usually, first and foremost, with insurance, you could have gotten insurance directly. You should have gotten insurance through a broker or through an agent. The advantages of using a broker or agent is that they will be able to help do the runaround.
They understand the things.
Yeah. It's also sometimes people opt to go directly to an insurance company. That said, the process will be one, you just need to show proof that the loss or theft or robbery has occurred.
Yes.
And that way, there's a simple form to fill up. There's sometimes a police report that needs to be followed. In cases which are of large losses, an independent loss assessor is usually appointed.
Yes.
So that that's a neutral party. It doesn't belong to the insurer or the insured. Goes down, reviews all the facts on the ground, then comes up with a report based on the policy or insurance cover you had.
And what happens? They give you back the money, you value what was stolen. And in case of a fire, you insured your car comprehensively, it catches fire, they buy you a brand new car. Is that what happens?
Not exactly.
Let's get the gist of it.
It's a process. It's an issue of indemnification to bring you in.
Let's try to use plain English. Okay. Indemnification is a big word.
Indemnifying. To bring you in a state in which that car was immediately before the accident.
Yes.
So insurance is not
you had an old car, just to chip in. If you had an old car,
you buy them an old car.
They will definitely restore you to that position. Not buying you a better car.
Because people set their cars on fire. Let's talk about workman's compensation.
Yes.
What exactly is it?
Yeah, workman's compensation is a product to cater for work-related injuries. As one is going to the place of employment or leaving employment or during employment, they can be injured. So it is a statutory insurance product where an employer is mandated to insure against the such work-related liability that can be incurred. He can incur as a result of injury to his workers or employees.
Let's look at the extreme. In case of loss of life, what happens?
Actually, I wanted to chip in for workers' compensation. For instance, the owners of radio stations and TV stations, employees, say reporters and journalists, and at times they are rowdy crowds and what have you. So when a person is injured on duty,
during walk to work?
Walk to work, for instance. If a person is injured on duty, then they should be compensated.
How do you compensate them?
There's a process, I think.
They tear your shirt. What happens?
Oh, yeah. Considering it's through the Workers' Compensation Act, you have to go for a check with a properly designated doctors who will be able to calculate the amount of severity and the kind of compensation.
Right.
Worst case scenario would be death or total incapacitation. For that, it would get to up to 5 years salary.
Let's talk about that one about death. I'm aware of a case of a bank executive who died at his workplace, and the claim 60 months salary almost bankrupted that bank. Is there controversy still around that 5 years salary if you die going to your workplace? The insurance company, that company is supposed to pay 5 years salary.
Yes, if it is a total incapacitation, definitely it is 5 years salary. There is no question about.
Let's understand it very clearly. If a man wakes up in the morning, he's going to his workplace, and he dies on his way there, for whatever reason, the company is supposed to pay him 60 months salary, 5 years salary.
Yeah, it's provided for in the
To make it more clear, for as long as he dies while on his way to work,
Yes.
during work, or his way from work to home.
Do people know about? Do many people know about that?
But if on the way from work he stops and let's say goes to a kafunda for a few beers and dies,
Well, it's in the morning. Maybe he goes to take a Coca-Cola.
that is a problem.
Incidentally, Edmond, it is statutory, so all employers are mandated to insure against work-related injuries.
So if you haven't insured, you don't get anything. If you didn't insure your staff, you're not supposed to pay.
What we would say is that if staff are not insured for workers' compensation, which is regulatory, then they have an avenue where they can go and sue the employers in case they've been injured along the work.
And can the company insure itself, so it's you that pays this money and not them?
Yes.
Yes, insurance has the workers' compensation, which is compulsory, but as a top-up, it also has employer's liability, just in case an employee found out that the compensation received was not adequate. They have that avenue.
Okay, I'd like us to have an overview of the industry itself, but before we do that, broadly, what kind of businesses do you think need insurance?
Basically, everybody who's got an asset that they treasure needs insurance. It could be a building, it could be a business that has furniture, fixtures, electronic equipment, stock. Then you could go to life. Life is precious. It's very hard to value life. But then there should be at least some kind of compensation that can soften the punch with regards to any kind of illnesses.
All right, and let's talk about the insurance. Somebody was saying about half of the money that is paid to insurance companies is paid to our insurance company, which is a foreign company. Talk to us about the dynamics around that.
Well, we have to acknowledge that Uganda has not had that much insurance capacity over the years. It is something that is building over time. Insurance companies have gotten stronger. By capacity, I mean having the power or the security to pay back losses, especially the big losses. Now, where clients have big risks, for example, buildings of high values, etc., some of the insurance companies would be most comfortable sharing it with outsiders. You can share it with local players or you can share it with outside players. It helps because in the case of a claim, then you can also be compensated adequately both by local and outside insurers. And
maybe, Edmond, to cater for that, the Insurance Act was amended to the effect that the Uganda Re was established. So we are in process, the players are in process of setting up the Uganda Reinsurance Company. And it is a provision in the law that an insurer, reinsurance is the insurance
company is taking out insurance.
So it is a provision in the law that insurance business with an organization should be, or an insurance company licensed in Uganda, should be to the maximum extent possible be placed in Uganda before placement of the business outside Uganda. So as the authority, after the establishment of the Uganda Re, we will see to it that to the maximum extent possible, reinsurance is seeded in Uganda.
Locally.
Then, after the company has proved, or the insurance company has proved that they have exhausted the local capacity, then they
can only then can they get a
only
foreign
then
contract.
can they, yeah.
And this is going to be kind of a cooperative. It's all insurance companies coming together from the Uganda Re, is that right?
Yes, Uganda Re, and in fact there is a mandatory, what is known as a mandatory
cession of 15% to that national reinsurance company.
It's already in the law?
Yes.
It is in the law. In
What
the
is delaying the company
Insurance Amendment Act.
What is delaying the company being formed?
Maybe Paul
They are still working on issues to do with capital, raising the
How much capital do you need for a reinsurance company?
For reinsurance, currently the capital requirements are 10 billion.
10 billion.
That's small still. Why would it delay?
Paul, maybe
The
can
actors
I think one of the real challenges that have come with Uganda Re, especially when you're starting from scratch, is who the backup from the government or the shareholders to show comfort level in case of all the compulsory sessions that are being forwarded. It's a process, as you know, because it needed the amendment of the bill, the act to go through, then again getting all the forces together. However, I'd say right now where we are is we hope to see it completed, the whole process completed soon, and it will help in trying to retain a lot of funds that would have been going out.
When you say soon, you mean before the next election, shall I?
Yes.
Within 4 years. That's you soon.
No.
And every year we lose 100 billion shillings.
We expected a license application this year, but it seems there are a few issues to do with capital.
10 billion shillings, you can't raise 10 billion shillings? And the industry was
The industry, the shareholding structure has partly the industry and partly there are other players that can be brought on board. Say, for instance, NSSF and some other major shareholders. It's not just the industry, but a number of other shareholders. So regarding the capital issues, that is being worked on. And I can assure you, very soon we'll have a national insurance.
Before the election in 4 years.
Hopefully.
I don't want to target to
If we pray hard, we'll have it in 4 years' time. Let's have the time.
I believe 4 years' time is a lot.
4 years is
All what you say.
Could we have it in 24 months, 12 months' time?
This is something we've been working on over the years, but I should say we are near the end. So
is it like oil, 3 years? Give us an idea.
Sometimes you've got obstacles.
All right, going around in circles. Let's go for a break. We'll be back. Maybe when we get back, we'll be bold enough to tell us that truth. This is Spectrum.
More talk for everyone. Everybody talking like this in the car, this in the bar. Doesn't even matter wherever you are. With overload, what you really don't know is one number. You get a little bit more.
A little longer. Send text to all your loved ones and love a little longer.
Get 15% extra airtime guaranteed every time you load with MTN. Simply dial *145#. Get talking all day up to midnight with MTN Overload.
MTN, everywhere you go.
When I sing from the night, I feel my soul come alive. Memories flooding back. I climb the hills of Chikezi. I see the walls of Chibu. I hear the roar of the lion in me. When I sip from the Nile.
As we celebrate 50 special years, Nile Special invites you to toast to our great land. Nile Special, the rich, rewarding taste from the source. You've earned it.
When I sip from the Nile.
Not for sale to persons under 18.
With ShopRite's lowest prices, you will get great savings on the widest range of back-to-school supplies like 2 dozen 48-page Pickfair F5 exercise books at 6,400 shillings only. 5-pack blue or black nice clear pens at 1,350 shillings only. And a dozen red and black Pickfair pencils at 1,000 shillings only. Offer valid until 9th September 2012. ShopRite. Lower prices you can trust, always.
Spectrum on Radio 1 FM 90.
Welcome back on Spectrum tonight. What are the challenges and opportunities in the Ugandan insurance industry, and how are the players handling them? Our guests tonight, Ms. Rachel Kabala, Manager Legal and Compliance at the Insurance Regulatory Authority of Uganda, Mr. Paul Muhamya, Manager Property, Energy and Marine at Chatis, but representing tonight the Uganda Insurance Association, and Mr. Ivan Kilameri, Actuarial Officer at the Insurance Regulatory Authority of Uganda. You will be able to call in and ask them questions direct. Maybe they'll answer your questions. They don't want to answer some of mine. How was performance last year, Paul? The industry broadly in the
regarding the income generated from the industry, we wrote about over 290 billion in premium income. So that shows you that the growth in itself was about 23%.
You rose 23%.
Yes.
That's fine. Go on.
From 239 billion in 2010. So that shows you that the industry is performing well.
What are the forecasts for this year?
We forecast a 20% growth in the industry.
Almost same as last year.
Yes.
It's important to note for a market or economy like ours, this is very low, because it shows insurance penetration is still under 1%. When you compare it to the region, which is about 2.5%, you compare it to Western markets, which goes into the tens, like 30-40%.
30-40%.
There is a challenge with the contribution that insurance, the contribution of insurance into our market or economy compared to other countries. There is work to do here. One of the challenges, again, you can see when you look at the breakdown is the life insurance segment is still quite small and should be way higher than it is at the moment. It shows that maybe people are not valuing their lives enough to insure their lives.
All right.
So there's still work to do over there.
Let's talk about this. Since you talk about work to do, let's talk about a little bit more about this workman's compensation. Define it in more detail for us, and why are people not taking it out for their employees?
It is the employers who have to take it out.
It is mandatory, but employers are not taking out the policies. It is the regulating authority is Ministry of Labor, and in fact it has penal consequences if an employer does not take out the workman compensation.
Yes.
It attracts
what happens?
It attracts a fine. A fine because it is an offense.
A fine from the government or from?
Yeah, it is an offense.
Yes.
But
people don't know about it.
People don't know about it.
Because you don't talk about it.
People are not pushing for that. This is one of the reasons why we are here. We are trying. We are educating the public so that they are aware. Because it's also the employees should push for that right. Maybe
ladies and gentlemen out there, listeners, you need to ask your employers if you've got workers' compensation cover.
You want to riot?
Because
you know the workplace.
It is compulsory. In case you're injured or die while you're doing work for your employer, you have a compensation avenue for your family.
Let's talk about Edmond. After here, you should just go straight to the employer.
Let's talk about. Well, maybe I'm an employer myself. Let's talk about the employee. The employer takes it out, but he's got a risk on his hands. How does he get protected? Would he come to you and get insurance for that?
The employer?
Yes, he's insured all his stuff. But if something happens, if a minibus gets crashed somewhere, that's a huge loss. Life clause. Can they take out an insurance policy that so
life
you pass on the risks?
Life cover, but this particular product covers employees. Yes.
You can't.
Well, the employer has taken it out on behalf of their employees, so you tick that box. But now they have the risk. Supposing something happens, can they come for insurance against possible risk under that bracket?
Not under that cover.
You come for insurance before the loss happens. Now you talk about claiming insurance.
Yeah, that's what I'm saying. If they take out that insurance and something happens to their staff and they have to pay out large sums of money, can they take out an insurance to cover, to manage that risk ahead of time before it happens?
Yes, that's the purpose.
That is what we are talking about.
There is a policy for that.
Yes, that is the one.
So the employer will not necessarily carry the burden.
No.
It is passed on to the insurance company.
That's why we said insurance is a risk transfer mechanism. The risk is
the employer has has transferred his
the
risk
liability
and the liabilities there too to the insurance company.
Maybe to break it down a little further. In case as an employee you suffer injury, and let's say you're out of work for the next 6 months.
Yes.
All right. You still expect to be paid a salary or wages for that time. And so the workers' compensation, depending on how it has been calculated, will pay you for that time that you are out of work.
So the company still pays you?
Yes.
And where does the company get the money? Do they come to you? Would they have covered themselves against that?
The company will pay you,
And then
and the
claim?
insurer will pay the company.
100%?
It's all dependent on the extent of injuries that are calculated by particular experts.
Let's talk about this pension sector reform pending. NSSF is supposed to open up to competition so insurance, other players can offer retirement benefits. How is the insurance? Most countries, it's the insurance company industry that takes it up. How is the insurance industry here in Uganda ready for that?
The first move we've done is, what I can say is that, first of all, liberalizing the pension sector is a welcome move to the insurance industry. We've increased the minimum capital requirements for life insurance companies from 1 billion to 3 billion, making them more stronger.
Let's get that better. You've lowered the minimum capital requirements for?
Increased.
I said we've increased the minimum capital requirements
for
life insurance companies from 1 billion shillings to 3 billion.
Yes.
And as you are aware, in the pensions liberalization bill, there are issues to do with providing annuities for a number of people at retirement age.
What's an annuity?
An annuity is simply a series of payments that are made, say, if you retire. They are made as long as you are alive. You buy a cover to cover you. But it gives you regular income.
All right, give us an idea about what's happening now with NSSF and what will happen when the sector is liberalized and you guys begin to play in it.
The issue is not destroying NSSF, but creating room for competition such that NSSF gets a competitor or a number of competitors such that it provides better services. The issue is not killing NSSF, but providing a level playing ground, increasing competition such that there are a number of players that give you better services.
So what's going to happen? Right now they take 15%, they slash 5% from your salary, the company gives you 10%.
Actually, what is going on is that they will create mandatory sessions to a number of other schemes.
Let's try to understand this.
Not just NSSF, but they are going to create, there will be provision for creating a number of schemes where there will be mandatory sessions towards those schemes.
I'd like to understand the status quo, then we can talk about what could happen. Right now, they slash 5% of your salary goes to NSF, the employer pays 10%.
Right.
And they keep it until you reach 55 or retirement age, and they give it to you in a block.
It's a lump sum.
When they liberalize the sector, what will happen? Will it still be 15% to NSSF or 5% and then 10% can be given to another person? What will happen? Because they have to exist continually. There's a structured amount that still has to come to NSSF, I believe.
The mandatory sessions will remain as they
How
are.
much is that?
That will be 15%. 5 for the employer, 5 for the employee, then 10 for the employer.
That will still go to NSSF or what?
Not just NSSF. They are going to liberalize the sector such that there are a number of schemes where you have a choice to say, now I'm going to scheme A
or to National Insurance Company or Liberty Assurance
or any other, not just those, but any other scheme. So if there will be mandatory sessions to those schemes, you can decide my 15% is going to this mandatory scheme.
So there will be no compulsion to give money to NSSF. It will be like any other player.
You'll give to those that are mandatory, the mandatory schemes.
Let's understand it. They will license other companies to compete with NSSF.
Yes, for the mandatory contribution.
And you can take your money to anyone. NSSF might.
You can contribute to any of them. Yes.
As an employee who's investing in the NSSF, you have to note, as a monopoly, the questions that you ask yourself over and over again is, am I getting the best return on my investment? So by opening it up, as employees would hope, there's going to be more efficiency and a better return through competition. So it's something we all look forward to as employees who contribute to the NSSF.
And how is the industry ready for it, the insurance industry specifically?
We've got a number of insurance companies that have shown interest and are working quite hard to be prepared for when it opens up.
What are they supposed to do to get ready? How are they supposed to dress up? Raise their capital levels or what?
The capital was increased by the regulator, like we mentioned before. They have to provide a number of products that can encourage people to opt to those schemes, and they must also give good returns on investment.
So they have to create capacity.
They have to
create a new product line inside of them, a new business line that does sector pensions specifically.
What I can say is that most of the life companies do have those products at the moment.
Well, listeners, this is Spectrum on Radio 1 tonight. What are the challenges and opportunities in the Ugandan insurance industry, and how are the players handling them? We have the experts to talk to us about that. Tonight, surely you'll be able to call in and contribute to this discussion or ask them questions. Then let's look at the industry right now. What kind of people are actually insuring themselves?
Well, we have a number of corporate companies that are insuring. We have even individuals insuring. The only perception is that, say for instance, in motor third party, which is compulsory, people buy it as they think it is a tax. Yet they don't know that when you knock down somebody on the streets, or you knock down somebody and he dies, then you have a liability on your hands. So, and yet this product is helpful in such cases.
If you have the third party sticker,
motor third party. The only problem is that people think it's a tax. That's it.
And you knock someone dead, it's not what you would have wanted. Somebody else pays that person.
Yes, the liability that would have been incurred as a result of that accident is transferred to the insurance company, so it's the insurance company which pays.
How much do they pay normally?
The maximum currently is 1 million. The maximum currently is 1 million.
You knock a man dead, they give them they give the family 1 million.
Yes, but that does not deter the injured or the family of the dead to pursue the further remedy in court.
And who pays?
But the statutory amount is 1 million because the premium is low. It has been overtaken by events because that premium was fixed in 1988. So by then 1 million was enough. But now with the passage of time, it has been eroded by inflation. So now we are working. Still, it is a project that we want to embark on as IRA to find out, to get the consensus of the people, because it needs wide consultation. In fact, I don't know whether Ivan is carrying out the research. That is one of the issues
that is going on.
Maybe he can
we are looking at some of the challenges in settling motor third party claims. We have visited a number of stakeholders and found out that there are actually a number of challenges that to do with motor third party. So this process, even the limits, the issue of the limits has also come to our attention, and therefore this has kicked off the process of amending the motor third party.
Like my colleagues have mentioned, 1 million is just not enough.
But it was a lot of money in 1988. You remember we had just got the fundamental change. We had just gone through a currency reform in 1987. A lot of things, and 1 million was a large amount of money. I can't do the calculations, but it was a large amount of money.
But with the passage of time, of course, it has been eroded.
How much would it be now?
It depends on...
Now it depends on the data.
On the data.
You must carry out an actuarial study. You look at claims data over time. After that, you look at a number of ratios, insurance ratios, before deciding that maybe this is the actual amount that should be compensated.
You could look at the dollar then.
Just as well, you don't have to settle for the compulsory 1 million shilling limit. If you go to the various insurance companies, there will always be an avenue to increase, to top up the limit. 20 million, 50 million, 100 million. That can give you the level of comfort that in case you caused injury, third-party injury, while on the motor road, then you've got compensation. You've got insurance companies that can come in and assist in compensation. We know the perception has been many times is when you knock somebody, you rush get money out of your pocket and pay. But just to tell ladies and gentlemen, if you've got a third party, if you bought third party for your cars, which I believe most people have, try to get in touch with your insurance companies to see how you can help
top up.
Get the 1 million shillings. And if you go to court right now, what's the ceiling? Do you have some precedents?
I'm not aware, but of course the amounts are exorbitant. The amounts are very high. If you go
Some
to court.
people actually go to court. Do they actually get it?
Yes, they do.
You've always got, if you are knocked down by a motor vehicle and the driver, you decide to take the driver to court, depending on your case, you can get a lot more in compensation. Then it will be up to the driver to look for how best to compensate you.
So when you go to court, you're actually accusing the driver?
The owner of the vehicle.
The owner of the vehicle?
Yes, because usually the drivers do not have much. But you know what you're looking for is how much do you have in terms of compensation, so that you can realize what has been the money that has been awarded by the court.
And how does the owner of the vehicle get back to the insurance company? What do they get when they come to you with this court ruling?
If they have a top up, then maybe the I stand to be correct.
Well, they say they don't have the money. The court has ruled give them this man 100.
They usually pay the one.
You can understand now why, when, for example, it's trucks or taxis and they're in a nasty accident, the driver is the first one to run away.
Yeah.
So the owner of the vehicle goes to court, they are awarded 100 million?
Now, if the court awards 100 million, depending on the insurance he has, if he has limited insurance, then the insurance will pay up to their limit.
And if it's comprehensive?
The owner of the vehicle will have to top up.
If it's comprehensive?
Same.
It depends on
the limit.
The
third party limit.
Well, it's a complex web of things. Maybe with time we'll understand it. This is Spectrum on Radio, and tonight, what are the challenges and opportunities in the insurance industry in this country, and how the players handling these challenges and opportunities? You can call in now. Our numbers 0414 348 111. 0312-260-390, 0312-261-390. When you call in, please tell us your name and where you are calling from. Spectrum, hello?
Hello?
Yes, sir, your name?
My name is Owere.
Yes, sir, please go on with your question or comment. Hello? Sir, you're live on air. Go on with your question.
Yes, how are you?
Very well, thanks. How are you?
I'm okay. First of all,
Very interesting question. That is the workers' representative. Spectrum, hello? Hello? Hello?
hello.
Yes, sir, your name?
My name is Godfrey.
Godfrey, yes? All right, let's get back to the studio to get those responses. Yes, Rachel.
I'll answer question number 2 because I man the Complaints Bureau. Of course, the role before the amendment, the role of the Complaints Bureau was to mediate between the aggrieved insured against any insurer or any insurance, any person or any company or any firm providing insurance-related business, insurance-related services. By that time, it was we could not enforce our ruling, and in in amending the Insurance Act, one of the issues or one of our aims was to make that ruling. Well, of course, we realized that weakness, and one of our aims was to make the ruling a bit binding. So now with the Insurance Amendment Act, the Complaints Bureau, we can arbitrate, and with arbitration you can enforce that the ruling that is given. And
what was the problem before? The
problem, we were mediatory, because the Act just provided that one of the functions of the Insurance Commission by then was to set up a bureau to which members of the public can lodge complaints. But now, with the amendment, one of the functions of the Insurance Regulatory Authority is to set up to receive complaints from members of the public on the conduct of a person licensed under the Act, and to arbitrate and grant restitution, to give clout to the ruling. So now,
with penalties, you can enforce with penalties.
We make a ruling, and in fact, that ruling can be just appealed against in the Insurance Appeals Tribunal, which is yet to be established, but which we are in the process of establishing.
Before oil begins to flow.
Yes. So the intention.
In the meantime, I'm talking about real.
So in the meantime, so what I'm trying to say, Edmond, is that now the ruling that is given in the Complaints Bureau has clout, and unless an insurance player is appeal against it in the Insurance Tribunal, they're bound.
So before the tribunal is formed, this person has to pay. They have no recourse to appeal.
They have no recourse to appeal.
And if they don't,
so they are bound.
If
they are bound, sometimes what we do is, when we are approaching the licensing period, we make it a licensing issue, so that if you don't settle,
the license is not renewed.
The license is not renewed. So we're trying to find out ways and means, to devise ways and means of how to give clout to the ruling that is given in the Complaints Bureau. Maybe Ivan.
Regarding somebody talked about first of all that insurers don't pay. I would like to disagree strongly. Last year, insurers paid over 70 billion in claims.
Last year, 70 billion was paid in claims.
We can avail you the statistics. We have come up with claims guidelines. These are service standards for claims. We are saying that in 3 days, an insurer should visit the scene of loss, so that the process is fast, so that there is no dilly-dallying. The other issue is that the Complaints Bureau has been empowered. They've increased the power of the Complaints Bureau. So we also want those who say that insurers don't pay to come to us.
Right.
If you are saying that your uninsured did not pay, why don't you come to us? We have a Complaints Bureau.
All right. Our time is yes.
Maybe Paul.
I'd like to hear from Paul about Nick. I normally see some, not every day, with smiling and giving a big check with a smile. I'm not sure if that smile is from the heart. There's normally a smile as you give a compensation check. Talk to us about Nick. Is Nick? We'll come back to you this time. Let's hear from Paul about Nick.
I have to say the case of Nick is what I'd call a complex and unique one, and I cannot speak with authority regarding Nick. I'd say it's best left to the forces that are handling it at the moment. But for the level of perception, like my colleagues have said, a lot of claims are paid. I should also congratulate the IRA, the Insurance Regulatory Authority, is that they have heard the complaints of the public, and they have done quite a lot of work to ensure that a lot of complaints are addressed. But if you look generally, you have to ask which insurance companies you go to, and generally because they are licensed every year, if there are issues, then they wouldn't be licensed again by the Insurance Regulatory Authority.
So then, issue of NIC, you don't want to comment about it?
I don't think it's
because it's a big company. It's number 2 incidentally. It used to be number 1. Right now it's number 2. I've been looking at the figures. There's somebody else who's number 1. I think it's Jubilee. Why is government not insuring as we go?
I think
regarding government insurance of its assets, you know that originally there was no independent body to advise government on insuring of its assets. Now that the authority was set up, we are working on a number of strategies to ensure that government insures its assets. We are advising government. We intend to carry out a study and first of all find out all the assets that government has.
Okay.
And then from that we can base on that to advise that you need such and such covers in place.
Okay. And if they're reluctant, of course, you always can go to Parliament, which these days has a strong handle.
However, I would like to say that the autonomous bodies do insure their assets.
Oh, really?
The main challenge is the mainstream government.
Ministries and so on.
Yes, but most of the autonomous bodies do so.
We have to go. Thank you very much, dear guest. Miss Rachel Kabala, Manager Legal and Compliance at the Insurance Regulatory Authority.
There's one important thing for the listeners. We have a toll-free line.
Which one is that?
It's 0800-124-124.
And where are you found physically?
We are at Legacy Towers, 2nd floor.
Where is Legacy Towers?
On plot 3, Chadondo Road.
We have to go. Thank you very much, Rachel Kabala, Mr. Paul Muhamya from the Insurance Association, Mr. Ivan Kilameri, Actuarial Officer, the IRA of Uganda. Thank you for tuning in.
Happy to be here.
I've been your host, Edmond, Kizito Spectrum. We'll be back tomorrow. Up next is the news.